Guys, what kind of night was that, seriously? Just before the extreme escalation between Iran and the USA, there was actually an agreement for a ceasefire. Bitcoin went up, altcoins went up, and the S&P 500 went up. I'm about to close my short position at break-even as well. But I'm keeping it open for now, and meanwhile oil has dropped by almost 17 or actually over 17%. So oil is extremely volatile at this point, but I can tell you, don't take the ceasefire too seriously just yet. That's my opinion. Not just because this morning I was still at the hotel a bit outside of Dubai, and just a few hours after the official agreement, we heard explosions again. And not only that, if we look at this now, and it's important to keep this in mind, 2 hours ago, and it's currently 2:35 p.m. German time as I'm recording this video, 2 hours ago there was an official announcement from the United Arab Emirates that they once again had to respond to missiles from Iran and intercept them. So apparently there is still no ceasefire here, and there is something else that is very, very dangerous which could potentially cause things to escalate again. Because Netanyahu continues to attack Lebanon, even though the official agreement between Iran and the USA confirmed that Lebanon is also included in this ceasefire, but Netanyahu does not accept that. Therefore, things could escalate again very quickly, and then we would see this drop in oil as a fake dump, and also everything happening with Bitcoin here as a fake pump. But now let's move on to the analysis. I've prepared a few things here. There are new strong liquidity zones down here that I will be trading, where my short take profit is also planned if it comes to that. Of course, we'll go through the liquidation heat map. Take a look at this. This is also what I've marked very clearly on the chart. The 66,000 level glowing very brightly. If we look in there, there's an incredible amount of liquidity sitting here. And if we look at the last 24 hours, we now have both long and short liquidity heavily above and below us, which could of course lead to a bit of a roller coaster ride when the markets open. Additionally, if we look in here, where did this pump lead to? At the whale orders and large trades. We have exactly in this area where the rejection happened. If we look into that, a few whales actually positioned themselves there 2 days ago, and exactly in this area the rejection has now also been confirmed at the current time. And if we look at the short liquidity that has come in here, there were actually 1.93 billion at OKX and 2.89 billion at Binance in short positions, so almost 5 billion. But when I tell you that's nothing yet, especially when we take a closer look at Ethereum later. Because if I go over to Ethereum and we look at how much short liquidity was taken out here and how many short orders came in, we're looking at about 8 billion that was taken out here. Now let's go back to Bitcoin, and I'll show you a level that becomes extremely interesting, and why, if we continue to rise, this would be the next opportunity for a short position that I definitely don't want to miss. It's a long-term trend that I want to show you. If I go in here now and include this descending trend, then we are at a level, if I zoom in now, where there is also liquidity. We can see that here at around 75,000 US dollars. That's where my theory comes in, or rather how I want to trade this as well. But it's precisely this downtrend line that we see here that would be in the next liquidation area. Which liquidation area am I talking about? If I now move out to the weekly chart and look further ahead, say 2 weeks or even a month, I'm talking exactly about the 75,000 US dollars, where we have the next cluster. I've already marked that in the last video as well, so this area is going to be super interesting. If Bitcoin actually continues to pump now and my short position, which I currently have open here, goes into the red, then I would either compound it again at this price or close it at a loss and test it again here. Because if you take this descending trend line here and include this liquidation cluster that's still lying here, it could really lead to a rejection at this point. But since this is a very exciting level that a lot of people are waiting for, if we break out here and people see that and believe, okay, we have a very, very long downtrend that's now being broken to the upside, that would be exactly here, so that we might just see a fake out here. Of course, this would mean that many people would trade this breakout, and afterwards there could really be a strong correction downwards again in order to pick up plenty of liquidity. Because I have to try to think a bit like the institutions here, who of course wouldn't just trade such a breakout, but would rather lure people into a trap with a possible fake out, so that we then continue to move downwards afterwards. But I'm not only bearish right now. If I were to see here that we have a confirmed breakout and then we get another retest of this long-term trend, and this long-term trend is going to be super interesting, if it breaks out and we then do a retest and confirm it, then I would open a long position again. At this point in time, to be honest with you, all of this is a bit too risky for me. Not only because I realize that this ceasefire doesn't actually exist, since everything is still being bombed in the background, even though you don't hear anything about it in the media at the moment. So now for the current situation, the first liquidation level I talked about in the last video was actually hit perfectly with this pump. That was exactly this area. We've now liquidated all of that. The next level would be 74,000 at this point in time. And why exactly is my limit order placed here now? And for that, I want to look at the smaller time frame, because the 24 or 48 hours, but the 24 hours are particularly interesting to me here. Because this is not just the candle level where, of course, a lot of rejection and short positions come in. Then as you can see here, right after we reached the high here, people started shorting. For the institutional players, it's now very interesting to fish for exactly this liquidity here once again. And that's the 72,643 US dollars, exactly where I also have my short position. And for this reason, I'm going to risk this position here. And that's not just because of the liquidity, but also because if we look at the 4-hour chart, we also have a strong fair value gap here. I don't even know if the smart money concept is already showing that. That's exactly what I mean. That's a strong fair value gap. That could, of course, be super interesting. And if I now switch to the other chart, which is a bit cleaner, and show you the Fibonacci strategy again, of course, if we go in here, let's also remove the trend lines again, but turn on the Fibonacci tool, then we would have a wonderful bullish level here that we could enter. In this case, from here, if we go in here to this area around 69,000 US dollars, if we really take the low. But if I switch to the 1-hour chart, that would be the small Fibonacci level, and we would be just below the fair value gap here. But on the 4-hour chart, that would be the larger fair value gap. I'll draw that in again with the line. It's roughly in that area. And then if I go into the 1-hour chart, you can see that the 0.5 Fibonacci would be exactly where we would close half of the fair value gap, provided we don't fall further. That's why I'll keep an eye on whether we actually get a correction here after this upward move and really see a trend continuation, and then the higher prices could go up to 75,000 US dollars, or whether this was just another fake pump and everything that was agreed upon between Iran and the USA gets undone again, and we might actually see lower prices once more. But that's something we need to watch now, because while pure chart analysis is of course very good for trading, you can see here what can happen with just a small piece of news, and in recent months the price has obviously been very news driven. Before we move on to Ethereum, because an incredibly exciting level has been reached there, let's quickly talk about oil. Do you remember in the last video when I analyzed oil, and the question was perhaps even, was what happened in the background with this ceasefire already priced in? Because I mentioned that I was considering shorting oil since we had this strong bearish divergence here, and in fact that would have worked out. But I have to be honest, I stayed on the sidelines. Why? Because we were on the verge of an extreme escalation. If this agreement between Iran and the USA hadn't happened and the announced attack had taken place, oil would of course have shot up with a massive breakout, and that's why I ultimately didn't take this position. Now let's move on to Ethereum. If we take a look at Ethereum, it's super exciting. Because if we look at it now, we also have the liquidation level up here. The first one, which was still in there from the last video, we've broken through it to the upside. That means I can remove it now, but we've entered the next major liquidation level here. Specifically, this was the monthly liquidation level on Model 3 in the liquidation heat map from Coinglass. And that was exactly the area I marked on the chart where we've now picked up a significant amount of liquidations. But that's not all. If we zoom out a bit here, we can see that this was still the top of the bear flag, exactly what we've been marking for quite some time. And this was actually the top where at the current moment, the first rejection occurred. And things are getting very interesting with Ethereum as well, because at $2,265, we still have this liquidity sitting at the top. But we'll also see whether there's a continuation of the trend here and we keep pumping. Despite everything, there's also a massive fair value gap on the 4-hour chart for Ethereum, which we shouldn't ignore, and it's located in this area here. And if I draw that in here again, we'll also take a look at how it aligns with the Fibonacci levels. Because the first Fibonacci level on the 4-hour basis would actually be 2,146. That would also be, if we look closely now, a very interesting level that we've broken through to the upside here. Which of course could lead to another retest, because precisely this zone where we were rejected twice and then broke through to the upside with such a strong volume candle, is usually very interesting for us to come back in for a retest. However, if we switch to the 1-hour chart and include the Fibonacci level, then it's not this low that's taken, but rather we have this higher low, which in this case is of course much more interesting. And that makes things even more exciting, of course. Where the fair value gap is, just below that would also be the 0.5 Fibonacci retracement level, and that could definitely become interesting. However, it wouldn't surprise me if we even go one step lower and dip back into this zone where a lot of rejection volume came in, so that we really go back in there, maybe down to the 0.618, and perhaps use that as a springboard to continue rising. But all of this really only applies if the market opening today doesn't already result in a pump and everyone celebrates everything that's happening in the world right now. I will be watching the market. Of course, I will also keep you up to date in the Signal group. I'm actually looking for a few new short entries right now. At this moment, what is really exciting for me is my short position, which I have now placed with a limit order, all of it directly connected to these liquidation zones here. The first major one, as I mentioned, is between 66,300 and 66,200. Which is exactly the level that I have marked here. The brightly highlighted area here is exactly the liquidation level for me, which is why I'm setting an alert here now. If we reach it, I'll know that my short position should go into profit. So I get notified and can take partial or even full profits there. And that's why it's interesting when this level is reached. If we continue to fall further, we must not ignore this yellow liquidation level either. That would include everything below here in this case, down to 65,000 US dollars. And if we look at the 2-week chart, we also see a bit below that at 64,000 US dollars. Because this major level also shifts a bit further down right into this area here, which is also very interesting to target. Otherwise, if this doesn't work out now, for me it's 75,000 US dollars. We really need to keep an eye on that. Simply because we have this liquidation level and another one up here. And as I mentioned earlier, I'm now going to bring in the clearer chart again and also include this long-term trend line in the daily chart. Then we'll see that this is exactly the level that will become exciting. Will we see a rejection here? I can quickly turn this trend line into a trend channel for you, and that's where it gets interesting. Will this trend channel hold, and will we continue to fall here and see lower prices? Or are we really already seeing a breakout that could push us further upward? Otherwise, almost all positions are actually in profit, including the trading bots in the Signal group, with the exception of the S&P 500. That one is currently at a loss, but otherwise all positions are in profit here, and the trading bots we launched on Hype worked out perfectly with this pump and have already secured the first profits. In addition, we also have the spot DCA bots, and those are also working wonderfully at this point in time. If you want to know how this works, feel free to subscribe and like my channel and this video. Check out the first video, 100% passive income on autopilot, where I explain exactly how these trading bots work. And also super exciting is the video, does the simplest trading strategy work every time and you're still not using it? Because it could change your trading life. With that, I want to thank you for watching and see you next time.